This is a segment of the show where we talk about somebody who came into my office and essentially their IRS situation was a train wreck. They were in big trouble, and we got them out of it. So in this story today, we had a young couple, and one was an electrician and one was a graphic designer. So these are not real high-income individuals. They're just sort of your average, run-of-the-mill, middle-class, kind of families. And they had managed to rack up a pretty good-sized tax bill. It was $50,396. And to your average family, that's a lot of money.
Indeed.
The installment agreement payment on that would have been somewhere around, I want to say, $750 a month. And that's 2 car payments for lots of families, isn't it?
What's their income kind of like? Just curious on that tax bill. Any rough idea?
Well, there's not a correlation. As I recall, their income was somewhere between $60,000 and $80,000 a year. So you're not talking about
tax bill equal to annual income.
Yeah. And it wasn't a tax bill from 1 year. It was, as I recall, there was somebody in the family that had been previously self-employed and managed to run up the tax bill. So long story short, we filed what's called an offer and compromise. An offer and compromise is where you make a deal to settle for less with the IRS. And it's based upon a relatively simple math equation. But we went ahead and filed the offer. And because of some of the assets that they owned, our offer was $19,587. So this is not one of those 5 or 10 cents on the deal,
right?
Cases that we talk about so often. This was something like 40% of the tax bill, but ultimately the IRS accepted $19,587.